People ask me all the time, hey, if I have $75,000, $100,000, what should I do to make more money? And the typical response is, well, invest in real estate, invest in stocks, or some of the new and exciting things such as Turo or trucking or Amazon. And those are all excellent options, of course, if you know what you're doing. But I have found unique opportunities that really aren't on anybody's radar. So let me show you one that I took advantage of a year ago. A friend of mine had a family friend who was in business for 10 years, and that business was successful, meaning that that owner operator was making six figures year over year. So if you know the median income here in the US, you know that it's around $75,000. So anybody that is in fact earning six figures on their own terms year over year, you've made it. Kudos to you, because it's not an easy thing to do. So that's definitely something that one should celebrate. So when this opportunity was brought to me, I understood the industry, though I have no experience in the industry, but I do have many years in business consulting. So I understood the ebbs and flows of how the operations worked. But the one thing that I wanted to dive into immediately was the financials. The financials really tell the story. But here's the deal. Most people think that it's the tax return or the profit and loss statement and balance sheet that tell the story. And that's just not true. You can really find out all the details if you dive deep into the general ledger. What does that mean? Literally every transaction. Because in businesses are able to write off ordinary and necessary expenses, and they have the latitude to be able to classify those expenses. And of course, thanks to social media, all of you know that you can definitely write off or expense cars, and you can put family members on payroll. So when you look at things such as tax returns and profit and loss statements, if you're just looking for sales, and then of course expenses, and then net income, yes, that tells a story. But when you dive into what those expenses are, to see if they're necessary, not ordinary and necessary as far as the IRS is concerned, but ordinary and necessary for operations. So let me take you behind the scenes and show you how I analyzed this business. So here's the profit and loss statement. Sidebar. In QuickBooks, nothing was reconciled. So at this point when I was viewing it, I don't even know if it actually happened, didn't happen, if it actually went through the bank account or didn't go through the bank account, okay? So this does take a certain skill set, but I am a forensic auditor, so I was able to kind of get through the weeds quickly. So here goes. So total income for the year of 2019 was $345,000. Okay, that's an awesome business when rent is only $1,600 a month and the necessary support staff to run the business was only $50,000 a year. As you can see, low risk, high reward. What was the true value of this company was the client base. These clients have been with this company for 10 years. And yes, in 2020, there was a blip. There was a blip for everybody. So I didn't even look at 2020 financials. I looked at 2017, 2018, and 2019. And what I know for sure, during those years, the owner operator of the business, in fact, had her car paid for, was making six figures, had her health insurance, dental insurance, and health and dental expenses paid for. In addition to that, she also had her son on payroll, almost six figures. So I did the quick math. Here it is. Owner's car, insurance, her salary, son's salary, some expenses that were like miscellaneous, but for sure, probably definitely not necessary to operate the business. And then of course the accounting fees. They had to pay an accountant bookkeeper. Well, that's also one of my skill sets. So when I looked at this, I said to myself, oh my gosh, There's $312,000 in this organization that I could reallocate to me. Now, not just necessarily me personally, because I was clear when I acquired this business that I did not want to operate this business. But if I brought in additional support staff, then certainly I can take that bucket of $312,000 that I know has been spent year over year on those line items that I showed you, and I can reallocate it to support the business. So that's exactly what I did. So I acquired the business. I paid $75,000 for the business. I onboarded additional support, and then we started to really dive into the day-to-day operations. The first thing that I did is I streamlined billing and invoicing. That was something that was very untidy over the years prior. The young ladies that stayed on with me after I acquired the business did inform me that that was one of their biggest pain points, not only for them, as it took them hours and hours to figure things out between quoting and then actually invoicing, but also tracking and receiving payments. So that was the first thing we got tidy, and that shaved off 15 hours per team member per week. So that was already a savings of 30 labor hours just by making that one adjustment. The next thing we did is I sought out another third-party contractor who is the liaison between ourselves and the governing agency. And I was able to negotiate pricing that was 20% less. Nothing additional, no additional changes as far as hardware, software, etc. So that was an immediate savings. And the young ladies who worked with the previous program actually prefer the new program as it is much more user-friendly. So it's a W all the way around. And then last but not least, because there were so many changes during 2020, we designed a remote working system that would give all of us the latitude to be able to have access to all the information at one time, and then of course to be able to process it not only where we desired, but also at our leisure. So you see, in business, it's not always about the money. It's about designing an ecosystem that works for your needs. And in this scenario, I definitely wanted to treat this business opportunity as one that would be in my business portfolio. I did not want to have to work in the business. I definitely knew that I wanted to work on the business, but on top of that, I also wanted to secure my investment. So if I were to compare this to any of the other advice that you've gotten or that I've gotten in the past as to how to earmark X amount of dollars to make passive income, I would say that this turned out exceptionally well. But it was because I have the understanding of how businesses operate. So before I even decided to acquire this business, I knew on day one what I could do to make the necessary shifts to not only protect my investment, but to ensure that we would be at a break-even point within 90 days. And then in addition, to ensure that it would continue to be a value add to my portfolio. So we're year one, so far so good. It has definitely exceeded my expectations. And in 2021, we've been very fortunate to be able to regain clients that we had lost during 2019 and 2020. So we're almost at the original numbers of 2019. But the thing that I'm most proud about is through this positive experience, of course, I did believe that the logic was sound. But after it was proven, it gave me the confidence to make a really exciting decision. After 20 years of being an employer, I now, moving forward with my new ventures, no longer want to wear that hat. I want to be in business in joint partnerships where everybody has an equal say, where everybody is tied to the upside and the downside. And though I'm unable to restructure some of my businesses from the past in that capacity, I'm excited to have the opportunity to structure this business in that capacity. So in December, the two ladies that stayed on with me here, I offered them full partnership. So we are in fact full partners, equal partners. So we're tied to the up and the downside. We all have an equal vote, we all have an equal say, and drafting that operating agreement has been very insightful to be able to have the tough conversations about what happens, because through the duration of a business and a partnership, frankly, things are going to change, motives are going to change, needs are going to change, and I'm grateful for the opportunity to not only have been able to take on a business that had so much upside, but that the two young ladies that were already a part of the business are trusting in this dream, if you will, to be able to be full partners with having the support, so be able to experience entrepreneurship without having to take on the personal risk, but at the same time to take on the day-to-day challenges and decision making that is necessary within a business, having P&L responsibility, profit and loss responsibility, because that's something that an employee doesn't necessarily take on or feel. It's a different level of commitment. But knowing for a fact that if we treat this business with incredible respect and manage everything that we can possibly manage and control what we can control by ways of monitoring efficiency and profitability, this will be an incredible opportunity for them to start building their financial portfolio, and then what it's done within their families, and for their loved ones to be able to have a bird's eye view as they walk into this challenging and magical opportunity. So that is truly the magic behind this particular business. And I know that the DNA within it is going to be woven so tightly that the future is truly bright, because it is truly built on intention, accountability, integrity, and making dreams come true.